Hi everybody, Alex Deploy here from Expert Forex, and in this video I want to pass on some really worrying information about the Forex market that you should be aware of because it impacts all manual and Forex robot traders. I know that I certainly will be taking steps to deal with these changes in the market, which are incredibly bad for certain traders, and damage control is of great importance. Now, just as an introduction, we all know that the market moves in waves, so it would trend and then consolidate a little bit and then possibly correct and then consolidate again and trend and so on, and you get different waves. You get sideways waves and you get downward waves, as I just shown you, and you get upward waves as shown on your screen right now. Essentially what happens is that these waves have a top and a bottom and so on, and that is called the vibration rate of the currency. In other words, how much does it vibrate? How volatile is the currency? Now, some currencies, and if you look at the chart on the screen right now, here are the daily candles. So some currencies will have 180 pip daily candle, others will have 100 pip daily candle, and others will have 40 pip daily candles, and that's the vibration rate that I'm talking about right now. Now, in order for us Forex traders to make money, we need vibration, we need action, we need volatility in the market, because we want to trade the price from the bottom to the top, and we want to make 180 pips and so on. If there's no movement in the market, we cannot make that money. Now, on my charts that we use for our daily webinars, our trading webinars, I have a chart here, for instance, that shows the ATR indicator on the daily charts for 25 currencies. And essentially what is of great concern is that the ATR is at its lowest base for most of these currencies. It is at a very, very low base. So for instance, this is the most volatile currency in the market at the moment. It's the pound New Zealand. In April, the end of April, the volatility was around about 200 pips a day. It's right down to 119 pips. Look at this one, over 200 pip volatility, right down to 100 pips. So what I'm saying is that the volatility in the market is literally halving over the last 6 weeks or so, because this covers from April to end of to July. So this covers May, June. So it's about a 10-week period, that those charts that I show on the screen. So I've got, what I've also got here is I've got a ATR reader that gives the ATR in pips, because it's so much easier to see it in as a number. And then I've got the actual ATR on the screen, so I can see the actual reading, and I can see the shape of the ATR indicator, and they are all going down, and most of them are at their lowest. So now, what does that mean to you and me as Forex traders? As I explained earlier, we need movement to make money in this market, and if we are getting, for instance, on some of these currencies, 35 pip movement in a day, even 50 pip movement is so small. I promise you, it is so small to make money in this particular market, and all the currencies have virtually halved their volatility at the moment. So again, what that means to us is that if we are trading EAs, for instance, that rely on trending markets, we're not going to make any money because there are no trends in the market. The biggest movement on the whole day is only 50 pips. It's terrible. Even manual traders are going to battle to find trends in this kind of market. The only type of trading that might work is bounce trading or grid trading. That they love this kind of market because they don't need the price to move that much to make money. But if you are trading a trending indicator or a breakout indicator or a method that is highly lagging, like a moving average crossover method or something like that, you are going to battle like crazy to make money in this market because it has gone to sleep. In plain English, the market is going to sleep. It is at its lowest. If you look at these charts, most of those charts are at their lowest they've ever been. Currently, our GTM monitoring accounts are doing quite well. As you can see, there's about almost a $1,300 profit on the GTM monitoring accounts. These are live accounts trading our plug-and-play GTM settings. The Dream Machine is also doing well. You can see there it's a $200 gain, so we've almost got a 1,500 pip gain on those two, and these are both sideways trading EAs. The Make Money has contained losses quite well on the plug-and-play settings, but is $400 down. So overall, we nicely positive, but certainly the trending EAs like the Make Money are not profitable at the moment. So I thought I'd just bring this to your attention. However you use this information that I'm giving you is up to you, but I'm just warning you that I am affected by this. I am taking action. I'm getting out of trending type of trading techniques, and I'm getting into sideways techniques because of the extreme low volatility in the market. That is how you handle risk in this kind of market. Now, I hope you found this video interesting, and I hope you found this information of value to you, because there are times when one should sit on your hands and not trade the market if the market is not suitable. So from me, Alex Deploy, cheerio.